Good morning, everyone. Well, the U.S. Senate's getting closer to a bipartisan deal. The plan reportedly would require formal discussions on a long-term tax and spending plan no later than December 13th, in return for which it would finance the government through January 15th and lift the debt ceiling through February 7th. It's already clear that the most conservative Republican members of the House of Representatives aren't going to agree to this. Given their opposition, the leadership of the House might not even bring the bill up for a vote. If they do decide to bring it up for a vote, and they then pass it with the support of some Democrats, it could be a defining moment in U.S. politics that splits the Republican Party. As for the FX market, the reaction was as one might expect. The safe haven currencies, the yen and the Swiss franc, weakened against the dollar, while the high beta currencies gained. Australian dollar most of all, followed by New Zealand dollar, the NOK, and the CAD. The euro, sterling, and the Swedish krona were largely stable. Gold and silver were slightly higher this morning than they were yesterday morning at this time, but still they were well off their late European highs, which were hit when it looked doubtful whether an agreement could be reached at all. Now, let me stress that although the Senate is showing some progress, as I mentioned, it's by no means guaranteed that this plan gets through the recalcitrant House, and therefore the risk on trade remains risky, in my view. Now, perhaps in recognition of that fact, the T-bill market is reopening this morning after yesterday's Columbus Day holiday with yields unchanged to slightly higher within the first 6 months. In other words, the market that would be most affected by the agreement isn't celebrating yet. That may be because even if the Senate bill does pass the House, the market's just getting set up for a repeat showdown next January and February. I think the T-bill market is likely to retain a risk premium, and therefore the dollar is likely to remain under a cloud until then. Well, the safe haven currencies are likely to remain stronger than they would otherwise have been. Today, the focus in Europe will be on the ZEW survey for October. The current situation index is expected to rise, while the expectations index is expected to remain unchanged. Although last month the ZEW index was better than expected, but it had no lasting impact on Eurodollar. In the U.S., the Empire Manufacturing survey for October is likely to rise slightly, but who knows if anyone cares about U.S. indicators for the time being. It's all down to the debt negotiations. For more information, including technical analysis of the currencies, read the full comment on IronFX.com. You can also like us on Facebook, follow us on Twitter, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, head of Global FX Strategy at IronFX, wishing you solid trading.